Hey guys, welcome to a 2023 edition of the Crypto Live with Alex. Happy New Year. I hope you have spent some nice time with families and that you are prepared, not prepaid, for the upcoming 2023, which is going to be volatile. You can already see that in the charts. So we're going to do a little bit of macro overlay today just to see the conditions, and then we will switch to the Bitcoin and Ethereum chart. We have discussed that for a couple of times. Last Crypto Labs was devoted, but I think still we are coming to some levels which might be of an interest of any viewer who is still interested in the crypto space. So I think we should revisit that until we see some reversal, which I think it's going to come soon. So let me start. Yeah, it's a 10-year anniversary. So Trading Analysis is celebrating 10-year anniversary, and looking forward for another 10-year. We are working hard in the back end to deliver some new products. And that has been immensely interesting. The whole process is really fun and really great. So I'm looking forward to that. Let me just revisit CME Fed tool. So something we use just to see where a market stands with the outlook with Fed. So NFP is tomorrow. So far trading in this year has been pretty sideways. From the end of 2022. CPI next week, very important obviously, so that CPI might hammer only one or two Fed hikes until March. So 1st of February market is looking for 57.0% for a 25 basis point rate hike, 43% for 50 basis points rate hike after the jobs data we had yesterday. Jobless claims and I think ISM manufacturing was, but also some components in ISM showed that prices are falling rapidly. So this is also one of the signs that actually inflation is rapidly moving lower. So next week CPI, very important one. This will probably change a few times more, but target rate now it's between 4.75 and 5%. And if we look two-year US two-year yields, they're around there, 4.48. So 450. I do see this as a potential five-wave development going up to 5%. So I think we enter actually the region going back and forth, maybe a little bit more upside where and from where we're going to start to see a larger correction, which was basically our team and hypothesis for the last couple of months, to connect this technical and fundamental outlook to actually see a little bit more in forward what is going to occur. So I do see a little bit back and forth. Maybe this fourth wave going to last a little bit more, a final push down, and then we're going to see some type of a pullback moving lower. So let's look what the market has looking for 22nd of March. So as you can see, 6.2% depends, of course, so that we're gonna go 25 basis points. So for 4.75 to 5%, it looks 53.1%. So I think we are in the last months of the potential Fed. Generally, Fed is actually in the last, I think, one or two rate hikes far from plateauing or actually pausing. I don't think they're going to move rates lower until they see potentially CPI falls down below 5% and stays there. I don't think we are still in that environment, so I think they're going to pause. I don't expect still a full pivot like people or some market observants are calling. I think first they're going to pause for a couple of months, and then actually to be data dependent, as they say, and make decisions on a basement of that, because we are basically in the new remaking of the global supply chains and all of the other stuff. So potential inflation might actually pause for a year or two, but I don't think we're gonna see 2% and any near soon, at least in the next couple of years. So let me just show you 10-year yield. So pretty much we have tracked this in CryptoLab for a long time already. Let me just enlarge this chart. So I do see the same picture, so potentially wave 4 and wave 5, and then we're going to consolidate, or we're going to have a straightforward correction. Most likely I will look for some type of a consolidation. That will be a natural outcome, and the triangle will be something which I will not be surprised to. Back and forth, up and down for the year or two, maybe end of 2024. It's very difficult to speculate with the time. Depends how the correction will unfold. So I do see that times is coming, that the risk on assets will continue on the upside. Dollar is also reacting on this because of number of things. Interest rate differential and global flows and a couple of other things. So still in a 5-wave move lower. After we're going to see a pullback. Dollar is having a nasty character of, at least I've seen that in the last 15 years, 20 years I'm tracking it. Dollar index has a nasty habit to retrace pretty sharply, and actually testing this 0.786 on the upside. So we will see the magnitude of this correction, but this signals that the 5 waves down are in making, which means at least we're going to see another push down after this correction is actually complete. So this aligns with our interest rate outlook and also with a couple of commodities. So we are continuing to, of course, watch that how it is going to unfold. So let me look total crypto market cap, pretty much same chart as a Bitcoin. So we are looking for an ending diagonal, a little bit more of a downside. And let me switch to a couple of things that we are looking on a stock market from trading analysis. So we have basically 2 wave counts because the current developments on the upside are still pretty much undecisive, especially currently where we have a sideways. But it seems that looking where the Bitcoin is, which sometimes can be a leading indicator, we might have a couple of more weeks of a downside towards 3,000, 3,200 levels. So we are carefully monitoring that. Volumes should be back after 10th, 15th of January, and we might get some price action, which is rather much more telling than the current one. So I do also see on this innovation fund, a sharp fall, of course, that was between the growth and value. So the value is still outperforming the growth, but potentially we are coming to some levels where we can expect a larger correction or a completion of this. So we will see. But this kind of agrees we have maybe a little bit more downside before we start to move on the upside, and the condition starts to become a little bit more favorable. And we do observe that in a couple of sectors and also in couple of stocks. So just to show you how do we cross all of these markets and try to figure out what is going most likely to be a next move. So let's switch to a Bitcoin chart, and I'm going to show you a larger time frame wave count, and then I'm going to try to outline here. So this is the bullish wave count. So we talked about this many times, and for now I do see this pretty easily as an ending diagonal. So I do think this sequence here justifies or at least kind of signals the potential that this is an ending diagonal pattern, which mostly when you look the Elliott Wave world, it's a finishing pattern where if you can define it or find it in the fifth wave development. Okay, so if we count this as a 5-wave move, ending diagonals actually signals you, especially when we have an overlap, which is a necessity, and we do have that in a wave 4, that we have a little bit more downside to go. The big question stays, are we going to invalidate the bullish count, which is already kind of piques my eye in regards of the duration. We are also trading below 200 moving average. RSI is pretty favorable. I like to look weekly on that. So far, as you can see, price action on Bitcoin from 2014 was pretty much behaving just a small touches lower below this 200 moving average, but we have seen very fastly market pullbacks above it and then continue the trend on the upside, which is not the case here. It's one of the warning signs. It doesn't mean still that Bitcoin will not actually potentially make one more impulsive move on the upside. So this is still not an environment which you say that actually that you can say that we are not going to go to any of these regions above 100K. We need to see a wave count invalidation, which comes around 3,826. Depends on a data provider, but one of the main Elliott Wave rules is that wave 4 cannot enter the territory of the wave 1, except in the diagonals patterns. So the question stays, do we see the wave 4 to be too long to correspond in time spent in a wave 2? 2618 is one of the last resorts that we are looking. So this times Bitcoin around January and February. Okay, so around this figure. So potentially Bitcoin might be a leading indicator if for the stocks if we start to see some reversals. So what do you have with the ending diagonals? There is a specifics of each legs that you have, so they do unfold in a certain relations, and there is some rules attached to this relation. Okay, so if we look this as a simple 3-wave move to the downside, and then this is usually there are messy patterns, so you need to actually look pretty closely for some type of a 3-wave developments. Ending diagonals are usually 3 waves, and I've talked about that last time. So the question is, and it stays in regards of this pullback. So can the pullback in the ending diagonals, and it's an Elliott Wave discussion, can be of a family of any zigzag, or it can be just ABC on the upside, which some of the books actually propagate. And some of the narratives are trying to push the family of the zigzags of any form except the flat. Okay, so in my opinion, since they're messy, very messy patterns, I will agree that any family of zigzags can be actually deployed. Maybe I will not agree with flats. Sometimes I maybe even seen that, but for some kind of a purists, that is something which should not occur. So let's find the kind of a middle ground, and let's say that these pullbacks can be of a double zigzag and triple zigzags, because usually they're very hesitating, messy patterns which indicates the last portion of the current trend on the downside. So what is also particular for this type of patterns, they're usually on the downside in 3 waves. Corrections, as you can see, are very messy, and there is a certain relations between the wave 1, wave 3 and wave 5. So usually when they're of a contracting variety, in this case we see that here this is a contracting variety one, just by the fact that the wave 3 is shorter than wave 1. So if we took some measurements here and actually measure them on the downside, you will see that sorry, I pressed the wrong button, so we need to measure wave 3 and 1. You will see here in this instance they're equal, and that's completely fine. Wave 3 should not be larger than wave 1, maybe a couple of pips. If we look, we are exactly equal. So wave 5 should be smaller in magnitude to the downside than a wave 3, which gives kind of this contracting look. I apologize about all of this stuff that I have on the chart, so let me just make this more clearer so that you can see it. So what I'm looking actually here with our members is that some of the targets on the downside, and I have 2 of them, so we will not speak about them here, but in general I will say from 12 to 15k we have a couple of targets where we're going to place our limits and actually try to be early, because of course not on a full size, so we are looking this to be a kind of a last push to the downside in the Bitcoin. So if we look also what's going on in Ether, it's pretty much just a touch a different situation. Ether was holding much better than Bitcoin. So let me just show you the larger time frame charts. I have a couple of these things opened, so I apologize for that. And let me look for you Ethereum Bitcoin, which on the larger time frame it's holding pretty better. So on a weekly time frame, I mean, this is still kind of a more acceptable that this is a wave 4 corresponding with this wave 2. We are around 1618 Fibonacci time ratio, which is completely fine. 2618 comes far wave here in let's say April or even May of 2024. So potentially this might be a wave 1, and we are working out this complex wave 2. That's one of the things. I'm never a fan of wave 2s going like this, I must admit that. Wave 2s should be sharp, because the market participants do not still accept the potential reversal on the upside, and that's why you will see most of the wave 2s everywhere very, especially when you start to change or potentially change a trend, it has been declined by majority of people, and that's why they're sharp. This is going pretty complex. ABC down and flat in X, and then we have an A up in B, down in C, a little bit more downside. It's possible. I have it also on my list. Some type of a triangulation. It's not so advisable, because this type of triangles are pretty, I would say, they're not enough balanced. Okay, maybe we have seen this couple of times in the last 10-15 years, but most likely they have a more balanced relation between the waves and the height of the waves, and it looks more balanced. Actually, a lot of people doesn't know that triangles are very rare actually to appear in a place of a wave 4. They're balancing acts between the bulls and bears, and I do not think this is a triangle, but in any case, if this is a triangle, the beauty of the methodology is that it will continue higher, because triangles are just a small pause or a big pause, depends on the time frame, before we continue higher. So this is one of the things. A simple solution is also some type of an ending diagonal. This will be 3 waves down in A, 3 waves up in B. I think we have a 127 ratio here, almost touched, which will look this for a B wave highs. And then this is a 3 wave subdivisions, which portrays a little bit more downside price action, and then maybe a double bottom or something like that, and then an impulsive move on the upside. So let me just address the other things that I'm looking. So on a Bitcoin chart, the solution that also I've proposed, even if we break to the downside and invalidate the bullish wave count, we're going to see an upside reversal. Okay, so in this case, when the both wave counts shows you potential reversals, this is a very favorable condition when you have even your bearish wave counts, which is actually showing that the Bitcoin after a pullback should go back to 4K and even below. For a moment, we have anchored this wave 3 here. So we'll label this as a 5 wave move. Not very particularly happy with some of the fib ratios, which are unreached around 107K. Also, some of the subdivisions here in a wave 1 doesn't fit to the longitude of the wave 3 and wave 5. So this is very small wave 5. Actually, it corresponds more to a 3 wave move in a flat, because we have seen 127 ideally here. So there is a couple of things, but I mean, cryptos are not so liquid, not big market cap, so potentially maybe it is exhausted. So minuses, as I said, we are trading below 200 moving average. Pattern gives a probability this was a 3 wave high, but we also have unfavorable liquidity conditions, which might change. And also we have a halving cycle, March of 2024. Probably the maybe we washed up all of the things that are not good in the crypto space or blockchain space. FTX, Celsius, blah, 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 all of that stuff is flushed out. We will see if the Grayscale and Binance will survive. But anyhow, if you look also the very bearish wave count on a Bitcoin, it actually shows you technically that we're going to see a pullback on the upside towards 30 to 42K. Okay. So in both cases, also in Ether, we think that we are coming to a region where we're going to see an upside reversal, either for a pretty sizable move on the upside towards the new highs, or it is going to be an ABC pullback, and then we're going to continue lower. Also, if we look at Ethereum, Bitcoin cross, it is still in favor pretty much of Ether. Okay, so let me show you that chart, a pretty nice chart. Relatively very visible in a sense of how you can subdivide these sections according to the rules. So leading diagonal and expanding variety. So as you can see, I was mentioning that a little bit of educational stuff. So wave 1 is the smallest here, wave 3 it's a little bit bigger, and then wave 5 it's bigger. So wave 4 enters the territory of the wave 1, but in an expanding volatility fashion. Okay, so that's why it expands on the upside, and thus there is a name of an expanding diagonal. So 3 waves pullback, and then we have a 1, 2, up in 3, consolidation in 4, up in 5, ABC pullback without the wave count invalidation, and then post that we have a pure 5 waves move on the upside, as you can see. And now I'm looking this as an A triangle B, move down in C towards 0.062, and then a continuation on the upside to actually complete this outperformance of Ether, at least in this cycle, which might last the whole of 2023 and even beginning of 2024. So either Ether will grow at a higher pace or a bigger pace on the upside, or actually if they start to move lower, it's going to fall at a slower pace. So that's how you can actually interpret this. But in my opinion, anyhow, Ether will be favorable as long as we trade below this wave count invalidation on the positive side. So yeah, guys, so I do think a couple of cryptos looks good technically. Of course, our members are focused on that as well. Everybody has his ups and downs, and I mean favorites, I will say. I do have my favorites as well. It's not many of them, I will admit. It's just a couple of them which I think I personally gonna most likely have an exposure in the next cycle. I will not gamble much on a couple of other also very known names in crypto space. So yeah, that's it, guys, for today. Let me just look a couple of your comments. And then, hey Bob, hi Alex, how it is possible for rates to fall in the short term if the Fed is rising? Bob, this is the real rate, so it's a relation between the bond market and yields. Doesn't have anything to do with the Fed. I mean, Fed of course can intervene, but if you look this is the markets which actually Fed follows, especially US 2-year yield. So pretty much rates can go down and Fed can plateau around 4.75. Okay. Hello Alex, could you check for us Matic and Nearcoin? Thank you. Charlie Aaron, what's your favorite count on SPX? Yeah, I already explained that. Can I request a Coinbase chat? I don't know, we probably meant chart. Hi Alex, do you follow BTC miners? Yeah, I look a couple of them. I look also a couple of stocks related to cryptos. Yesterday we saw a pretty sizable jump because of the Coinbase has actually signed an agreement for 100 million due to a mismanagement of their applications in sense of security and also KYC and all of that stuff that has been dragging, and this relief that they will go unpunished. I mean punished by the paying the fees, or if you call that the fees, but they paid 100 million and the case will be closed. So we have seen 13% up on Coinbase and a couple of other crypto stocks. Yeah, I do track that as well. Miners, yeah, miners are in pretty bad shape. I know that many of big ones are collapsed, so we will see how that will go. Okay, so let me just show you Matic and one more, and then we will have to close up. Of course, if you want to visit us and become our client, you can go to the website tradinganalysis.com and have a trial for our service. So again, immediately to warn you, we are a pretty reasonable service. We are not mooning, we are not overly optimistic. We just look technical and fundamental reasons to in our observations. Okay, so let me look Matic. So Matic still looks pretty good for me on the higher time frames. I do think we are in some type of a wave 2 pullback region. I do see possible further upside, especially if we cross this 3.0. I think we are in the last phase, so I like it for now. Of course, I have my limits in a sense of until when I will like it, but for now I think it's unfolds good on a higher time frames. So it's one of the things end of the cryptos I like. Yeah, let's look this PAXG. I like doing new things, so I don't know which one this is. So let me try to find which one this is and actually look for type of a movement lower, then a pause, maybe in a triangle, and then a final push up, and then we have some oh, there is more data. Okay, they're coming, but not much. Okay, so some movement on the upside, so this will be an A, maybe up in B, and then 5 ways down in C, and from there we have a nice 5-way move on the upside. So which one this is tracking? So PAX Gold USD, it pretty much resembles the gold chart. So wave 1, pullback down in a wave 2, 3, 4, and 5. So this might develop. Usually the resistance levels are the previous swing highs here. This one is already passed, so this one here, from where you can expect this to dive a little bit lower before it starts to move on the upside. So relatively nice for now. Looks like a 5-wave move, so you should expect a 3-way pullback with some support levels, which comes around 107 to 8 on this chart. So I don't know if you see that well. I will unglare this. Sorry guys, sometimes I do forget. Usually I don't, but I apologize when I do. Yeah, so quiet in a sense of participants. So I think next week volumes should be back, maybe not 100%, but as we go and as we roll into a new year, definitely with the events up front, the volatility will and volumes will come back. So yeah guys, so that is our outlook, a little bit packed of a macro outlook paired with what we see with the risk on assets, including Bitcoin and Ether. So if you want to check us out, again, tradinganalysis.com. Trial is $27, I think. And if we don't see you there, see you next week. Hit the like button and subscribe. That will help us, or it will help our algorithm to actually send this and that other people can view our perspective. So thank you guys, and see you next week. Bye bye.